Welcome to TradeTheMBI.com. This is John Reports for the 21st. So welcome to spring. It's not quite here in Europe at this particular moment, but eventually it'll get here. What we're seeing though is, look at this, hovering right at the ABM green in considerably weak conditions. We haven't even seen now we're getting to the point minus 27 for green. That is pretty dramatic. You're going to get some kind of a reverberation bounce from that. So if we hold up within these levels and right at the 50% from a Morganacci retrace here, you can see that some people will call it support. Well, it's only support if it holds up at this particular point. We're still not seeing any activity, and the reality is it's a horrible time of the month, given where it is. So are we likely to see it break a little bit more? Well, we're not seeing a buy configuration yet. You are seeing some short-term buyers taking advantage of it, and yet you can see that shorts have really exceeded themselves. Last time that was like this during the big drop, so we didn't see that kind of cataclysm, but as it returns down, that should create a little bit of a pop. So if it holds up here, great. Again, I think it's very simple from a trade standpoint. Well, let's just put up the numbers because that makes it easy. If you look at the deal slow, which is the green line down there, it says 27.16 and a quarter. You're below that, you better be short or out if you don't short and just want to stay long. Above that, you can still ride upsized moves. And it's just that simple. It's not a complicated way to approach it. Intraday is a little bit easier. Likewise here with the NASDAQ. It's right on the precipice for the NASDAQ. 68.96, 94 right now, so it's slightly below. Some of this is related to, obviously, not sure what the shock is with the Facebook and people realizing that their data has been used, collected. What are they going to do when it comes out that Google does the exact same thing, only over a broader spectrum? That'll be interesting to see how that plays out. But anyone who doesn't think that's been happening since 2001, the government's been doing it all along. So it's strange that people would now somehow find that compelling that Facebook has been doing that and giving out the data. So go figure. Anyway, Euro still holding up outside the range, so that support for the euro, despite the fact that the U.S. growth seems considerably better, and the prospects for inflation are probably the only thing keeping it under control, because if there were more inflation in the U.S., you would be drawn to buying dollar assets as opposed to European. So we'll see how it plays out. I think that, again, it's been a issue of central bank involvement, and the Fed wanting to keep the euro elevated has helped the U.S. As far as what its debt looks like in that, but that's a whole complex issue to get into. Of course, I've always said maintaining below that 124.5 here on treasuries, and a look below, and then we've been in this range, but it's just still looking for that 113 move back to, hasn't happened yet. If you had questions about whether or not the GDP had stopped, well, you're not going to see a move like this in oil if GDP had stopped. So obviously it may have been a bit of a misnomer. Plus, the extended cold is certainly going to create a draw issue, and that has impacts. And again, we're still going to be looking at the bottleneck nature of oil prices and that, despite the fact that you have supply, that limitation, and that impacts inflation in a big way. So we always pay attention to it. Likewise with gold, is not doing anything. We haven't seen any real strength from it here. No resets of steel or anything like that. So it's sort of been in a modest, homogenized sort of way. Oh, and now we look at our 5K chart. It's very interesting, despite, a near 40 ATR, average true range for a given day. We didn't move a whole lot here. We had the pre-market bump. We retraced just a little bit off of some of the short signals, but we had nice resets here. We do see steel here moving to the lower parts. Maintained itself for a little bit, and then we had a nice DOC spread from deep here where the shorts were really not active and everything, and then boom, popped up, and that led to a decent 50% move. And then we saw just a bunch of muck. There was really no movement in a solid way from shakeout. We had some positive situations from the DOC where you ended up with, cyan below red after the initial buy setups here right at the 50% range, nice support. But it couldn't take out the highs, and once that happened, this sort of average weighted price sort of just kind of drifted, and you ended up with a few decent resets. Nice GAMs right there above the 23% were perfect for little rides, and then we ended up with the exact same situation here again, close above the 23%. Did come back and get choppy in that for a little bit because it didn't have the strong orange move below. You had the green crossover along with the steel, but you didn't get that extra oomph like you see. So I guess that's a perfect example to show what happens when you don't see a significant amount of algo activity recognizing a dramatic shift. So it was just sort of a slow abatement until it finally dropped there, which was like over here, that then led to the explosion in price. What was interesting about this, even in this rise, you didn't get the cyan to move under red, suggesting a longer term trend run, and that's exactly what we didn't get because we peaked up, and actually happened right about here when you had the steel crossover, cyan right about there, and it moved up for a couple more bars before it began a slight trade. It wasn't any clear DOC spread or anything like that that made it easier, which is kind of interesting about that. So it's a little bit tougher with that setup to see a premonition type call. But again, the big move, 50% retrace supported right along it, and then you get the orange dip and everything right with the GAM, coming from the 50% above, and that's what we filled in. The problem was you had dips below the red line, so that needed to be filled in, which is exactly where we're at right now. So that fills that in nicely, and got slightly overbought within there, and so we're in a little bit of a weak spell as the DOC spread right there took place. But again, it's in a muck zone, and this is something I was talking with some people about the other day. It's you look for extreme moves that give you clarity. When you get signals that are in flat zones, it's a little bit more difficult because you're not necessarily guaranteed to get the kind of volatility that you may want directionally. It doesn't mean that it's not a correct signal. It just means that when you're in these zone ranges, it just could take you longer for it to work out because you don't have a significant algorithm displacement that's going to suggest that it's going to be swift. So sometimes those kind of trades can just take longer. That's the only difference. It takes longer, and time isn't necessarily as relevant as the signal. So another thing, that's why we use tick charts as opposed to time charts, because looking at it from a time base wouldn't do any good from that standpoint, because the market doesn't really care about time. It cares about money and that movement. So money really makes the movement, not synthetic support and resistance lines, again, because you have to have buyers when you reach those key points in order to suggest you're going to get anything out of it. So always worth pointing that out because it's a key element of the real market as opposed to just synthetic technical aspects. As always, though, I will put up charts as they're relevant and continue to follow the, well, in this case it was pretty blasé, but still decent moves. From you're looking at from 12 to 27, so there's still 15 plus point range you can buy within there, which is about half of what we have been seeing. I would expect that typical for me would be a normalized ATR that's somewhere between around 17 to 23, but it takes time once you've had big moves to aggregate that back to there. As always, though, trade well. We'll talk to you later.